So is the housing bubble popping, guys? That is the question.
That's a good question.
We are seeing prices being dropped all across the country, and you wonder to yourself, is this it? Is it finally happening? Is the housing market about to explode? Well, we're gonna have some data. We're gonna jump right into it, guys. My name is Orlando. Welcome to my channel. Right here, you see this map here. It's showing where home prices are falling the most. We're looking straight at data here. Okay, so if you look across this map here, we see Midwest here. We see Toledo, Ohio. We see Rochester, East Coast. Detroit, Michigan. Nah, that's not that's not a surprise. Either is Ohio a big surprise. And then we see Pittsburgh, Springfield, Tulsa, Los Angeles, Memphis, Chicago. We see Richmond. We see all of these. Now, we're not going to go over every single one of these locations. These are just some of the top places where home prices are dropping, guys. And I know a lot of you guys have been actually waiting for this, actually waiting for home prices to drop. Well, here is actual data showing where these places are happening. We're going to jump into it. Does this mean that the housing market is about to explode, meaning go down? Do we think that the crash is going to happen off of this? So we're going to jump into that. So don't leave after you get done looking at after all of these locations that are dropping here. So let's look really quickly at Ohio. We see that the median listing price is $115,000. I know a lot of you guys are looking and saying, wow, 115,000? That's not much, but it's the median price, and it's the Midwest, guys. It's the Midwest. It's not the East Coast, not the West Coast, not down South Coast, not Florida or anything like that. This is the Midwest. Well, anyway, they had a median listing price change of 18.7%. Now, imagine, guys, I just talked about the Midwest. Midwest does not have huge growth. It's a steady growth area, but it's not an area that explodes in growth. So when Ohio had a big change in values of their home, imagine losing 18% of that. Getting the type of explosion in value that you would see normally on the coast happen in the Midwest, only to get it yanked from you. It's crazy. It's crazy. And then we have Rochester, their 17% drop, guys. Then let's look at Detroit, 15.4% drop. Crazy. Pittsburgh, 13.7% drop. Let's look at Springfield, 5.8, Tulsa, 5%. Then we've got Los Angeles, 5% also. Memphis, Tennessee, 4.6. You can see these just go down and down and down from that point. At the very top, we have Midwest. Then it goes Detroit, New York. New York, 17%. That's insane, guys. That's insane. Now, I know what you guys are thinking. You're thinking, Orlando, finally, we're seeing these prices go down. That must mean that we're there. We're right at the crash. The crash is going to happen. And I want to say, guys, hold up, hold up, hold up. This is just the beginning of what a slowdown looks like, guys. We still have mortgage rate increases with the Fed coming in May. They're still going to do that. We're starting to see things like property taxes go up. We're starting to see companies start to lay off individuals. So let's jump into those things, guys. What is currently happening with the mortgage rates? Mortgage rates are continuing to rise, guys. We were almost at 7%. We know that the Fed is going to continue to combat inflation, guys. So we are going to see rates continue to rise. And when rates continue to rise, that means that it will be less people buying houses. It will decrease people's buying power, and you will see another slowdown, multiple waves of people slowing down, not purchasing homes. And so you want to see what's going to happen with that before you jump at this quote unquote opportunity that you see right now. And then let's talk about the domino effect that I've been preaching and preaching and preaching. That if you watch my past videos, you know that I've talked about appraisers doing the domino effect of continue to raise up values by appraising one house this way, and then the next house doing a refinance or purchasing, and then getting another price increase. And then it turns into a bunch of houses that increase incrementally next door to each other. And what is going to happen with that, guys? Well, if your house appraised higher, you have to understand that the county, the state, whoever runs your taxes, right? Normally the county, they are going to see that the house was purchased for more and your taxes will continue to rise. Now, what is going to happen to this major influx of houses that were overpaid for? Remember, if you overpaid for a home, you are going to pay the price in taxes because the house will be valued at that. You can fight it. You can tell the county assessor and say, hey, look, I got doing another appraisal. You can try to fight it all you want. But in the big scheme of things, you are going to pay more in taxes. And everybody who also paid higher prices in homes is going to pay higher in taxes. And a lot of people, guys, who did not take that into consideration at the very beginning, at the very beginning of this whole process, are going to pay a big price when they see an increase in their monthly mortgage bill because it's normally escrowed. And so you have that, a big, huge wave of individuals not understanding and not realizing that their property taxes are going to skyrocket. Imagine if you bought a new construction. You normally have a very little to none taxes because they're still trying to assess everything about where you live and how much it costs and all the other stuff. And then all of a sudden, in year 3, you get a huge tax bill.
What is this?
You get a huge tax bill that you're like, what? I didn't realize it was going to be this much. That's what happens, guys. So guys, you have to be ready for this, knowing that this stuff is going to come down the pipe. And this is one of the reasons why I'm saying, hold up. There's a lot more that has to happen with this market. There is a lot. Then we are starting to see places like Wells Fargo and all these other guys laying off individuals, laying off their own employees because they know that a slowdown has happened. Let me give you guys a little secret here based on the industry that I am. Everyone knows in the industry that Wells Fargo is one of the banks that will preemptively, when they see something coming down the pike, like a recession or a housing crash or anything that will affect their business, they will cut people faster than anyone else. They will cut them faster than anyone else. And Wells Fargo did just that this weekend because they see a slowdown happening. They see a crash that's coming down the pike and they are like, we're going to go ahead and cut our losses. But it's Wells Fargo, guys. Wells Fargo, they're not really a good bank. But a lot of people be like, Orlando, what are you doing, man? It's Wells Fargo. Why would you say they're a bad bank? I don't know. Maybe, I don't know. Why would I say that Wells Fargo is not a good bank? I don't know. Let me look at some examples here. Here, maybe this. I don't know. Maybe there's just a couple examples of why they're not the best bank. But anyway, guys, you're seeing all of this stuff happen, and these are red flags, guys. These are red flags showing you that it's just the beginning. Let's see how things are starting to roll down this hill. We want to watch it snowball and see exactly where this is going to land before we make any big rash decisions, guys. I mean, as always, do your own research. And if you need to buy a home, you need to sell a home, do what you have to do. Once again, this information is to help you make a better decision. And if your better decision is to buy or sell or whatever, then go for it. I'm just here to lay everything out on the table for you so that you know exactly what's happening in this crazy housing market. And once again, guys, I hope you got value out of this content. I'm gonna need you to watch this next video here. It will help you learn everything, like I said, about this crazy housing market. Get into your first rental property. Also, check in the description. We have our membership program. I will see you guys in the next one. Thanks.